Business Watch is brought to you by Nedbank.
The time is 2 p.m. A very good afternoon to you and welcome to another weekly edition or the weekly broadcast of Nedbank Business Watch. My name is Notile Sitole alongside Sifiso Ngumano.
Yeah, good afternoon. Thank you so much for choosing to join us here on Nedbank Business Watch. We do have a very interesting show that you will certainly enjoy this afternoon. We are going to look at the Ministry of Finance, which is in the spotlight this week for a very important development shaping the country's fiscal future. As part of its modernization and data-driven approach, the ministry has revealed that a recent tax gap analysis conducted by the Eswatini Revenue Service found 4.4 billion in taxes that is due but not declared or paid. Revenue that could have been channeled towards healthcare, education and infrastructure. At the same time, the ministry is hosting a stakeholder training at the Hilton Garden Inn on the development and application of public-private partnership toolkits. We are going to get into conversation with economist Sanelas Bia, and we are going to delve into the implications of this important development to the broader economy of the Kingdom of Eswatini. So stay tuned for that as we make sense of that development.
On the program this afternoon, be sure to look out for some of our leading business stories whereby Eswatini is intensifying its fight against financial crimes through a training on financial investigation and asset recovery for law enforcement agencies. Now, the training aims to strengthen the country's ability to trace, seize and recover assets obtained through illicit activities, ensuring that no one benefits from crime and that lost revenue is redirected towards national development. All that and more coming up immediately after this.
Exactly. It's 2 minutes after 2. Thank you for staying with us. You're watching Nedbank Business Watch. The show begins now.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Minutes after 2, per tradition, we start our show by looking at the leading stories around business.
To kick off our business stories this afternoon, asset recovery is a powerful tool and sends a strong message that no one should benefit from crime. These were the words of the Minister for Finance, Honorable Neureikenberg, during the training of law enforcement agencies in financial investigation and asset recovery. The training, which was held at the Eswatini Revenue Service headquarters, supported by the European Union and the Surfing Africa Southern Hub.
Eswatini has made commendable progress in improving technical compliance with the Financial Action Task Force, what is referred to as FATF standards. However, our mutual evaluation report and subsequent follow-up assessments has underscored the need to enhance effectiveness, particularly under the immediate outcomes 7, 8 and 9, which relate to, firstly, the investigation and prosecution of money laundering, secondly, the confiscation of criminal proceeds, and thirdly, terrorism financing investigations and prosecutions. The training directly contributes to addressing these areas. It will equip our investigators, prosecutors, and analysts with the necessary skills to trace, restrain, and recover criminal assets, ensuring that offenders are deprived of the illicit gains. This training is therefore both timely and essential. It reinforces the fundamental partnership between the Financial Intelligence Center and law enforcement agencies. This is an investment in the integrity of our financial system and in the rule of law. By building the capacity of Eswatini Financial Intelligence Center, our law enforcement agencies and our prosecutors, we are strengthening the entire value chain of financial crime investigations and asset recovery in Eswatini. Through practical exercises, case studies, and the sharing of experiences, participants will gain the tools and the knowledge to build stronger evidence-based cases, to enhance interagency collaboration, and to ensure the financial crimes are investigated and prosecuted with greater effectiveness. Excellency, while the training marks a significant milestone, it will serve as a foundation for continuous capacity building. In this regard, I would humbly request the European Union and our development partners to consider extending further technical financial support for the following key areas. One being training and operational strategic analysis in enhancing intelligence-led investigations for Eswatini's Financial Intelligence Unit. Secondly, risk-based supervision for designated non-financial business and professions to strengthen oversight of the non-financial sectors, as well as training on FATF Recommendation 6, which is focusing on targeted financial sanctions related to terrorism financing, as well as training on Recommendation 7, which is addressing proliferation financing sanctions, as well as support on the Recommendation 33, which is to improve the collection, analysis, and centralization of AML-CFT statistics in preparation of the country's third round of mutual evaluation review.
The director of the Eswatini Financial Intelligence Center, Babegile Matsebula, has vowed that they will not allow anyone to benefit from financial crime. We have a report.
Across our continent, illicit financial flows continue to drain Africa of more than 89 billion every year, funds that could otherwise build hospitals, schools, infrastructure, and uplift our community out of poverty. These illicit financial flows undermine state integrity of our economies. Eswatini, like many other nations, is not immune to these challenges. We have made commendable progress in strengthening our legal and institutional frameworks in line with the FATF standards following the Mutual Evaluation Report of 2022. We still have milestones to achieve, particularly in enhancing our effectiveness in investigation, prosecution, and asset recovery in line with IO 7, 8, and 9. As the Eswatini Financial Intelligence Center, our work rests heavily on collaboration. While EFIC is the mandated national center to receive and analyze and disseminate financial intelligence, the real impact of our work is realized when law enforcement agencies act on that intelligence by conducting investigations. When prosecuting, it is successful, and criminal actors and their beneficiaries are deprived of their illicit gains through asset forfeiture. This training could not have come at a more opportune time, as it is designed to equip our investigators, prosecutors, and analysts with practical tools and operational skills to identify and trace illicit financial flows, build strong financial investigation cases, and recover assets and that rightfully belong to the people of Eswatini. This is not just a technical exercise, it is about strengthening our justice system, restoring public trust, and ensuring that crime does not pay, not under our watch.
And you're up to date with some of the latest in business. Stick around. Nedbank Business Watch continues after this.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. You're still watching Nedbank Business Watch. Now, the Minister for Finance, Honorable Neil Reichenberg, has revealed that as part of its ongoing modernization as well as data-driven approach, the Eswatini Revenue Service recently conducted a tax gap analysis that is designed to better understand the difference between the tax that should be collected and what is actually received. The analysis revealed an estimated 4.4 billion emalangeni in taxes that were due but not declared or paid at all. Honorable Neil Reichenberg says this figure represents potential revenue that could have been channeled towards development priorities such as healthcare, education, and infrastructure. Now, this was during the income filing season as well as compliance improvement plan at the ERS headquarters. We delve into the implications of everything that the minister said there, or rather is continuing to say there because it's ongoing, with Sanele Sbia, our economist, who's going to help us understand a big figure. Sanele, good afternoon. 4.4 billion emalangeni is revealed, and one wants to understand, in an economy like ours in Eswatini, when we say the tax gap is sitting at 4.4 billion emalangeni, what does that really represent or presents as well as, in practical terms for our economy?
Thank you, Mr. Ngumalo, and a good afternoon to you and the viewers at home. So when we talk of a tax gap, Mr. Ngumalo, we're actually looking at the difference between the tax that has been collected vis-a-vis the potential tax base, and you use those consumption expenditures and all these other proxies to see how much of a tax you would be collecting. So what it means for our economy, Ngumalo, is ideally, ERS should be collecting, say, around 20 billion, but they seem to be collecting around 15 billion, if you remember last year's figures. So what that means is, ideally, we would have had 19 billion collected from domestic tax revenues going into our fiscus. But unfortunately, because of the tax gap, that means we have that potential loss in that 4 billion tax collection, which we could have collected and sent that for the fiscus. So what that means is government has a hard time now having to balance between infrastructure expenditure, health expenditure, education expenditure, and the business of keeping government just operating, because there is this tax loss that we're seeing. And if you look at our economy, you realize that Eswatini is largely dependent on SACU revenues. So this 4 billion gap would actually reduce that dependence on SACU revenues, thereby allowing the country to stay on a stable footing amid those volatilities within that funding streak or that revenue stream.
And maybe we do want to, drill further into that assertion that you're making there, because it's quite critical. We then depend on SACU, but the important sectors, and you mentioned them and the minister mentioned them, it's health, education, and infrastructure, very key sectors in the Kingdom of Eswatini. And, when we say key, perhaps we also do want to, explain why these are particularly key for our economy in the Kingdom of Eswatini. But I suppose the question is, what is the ripple effect there that that this shortfall has on public service delivery as well as our fiscal stability?
So in terms of public service delivery, Mr. Ngumalo, it means for the most part, because if you look at the composition of government expenditures, right around 33% of that goes towards the wage bill. So that's like this time around, it's going to go to 11 billion in some sense. So that means you now have, say, from what you've collected internally, you now have, say, 4 billion to run the government of business. So now that puts government in a tricky position in terms of service delivery until and unless we get those external funds coming in to the fiscus. And we do know that SACCO revenues come in quarterly. So now that has an impact on the cash flows management and the cash flow of government, because that means while we are waiting for the next tranche to come in, we really do not have that liquidity, that cash flow. It's only what our ERS collects. So now, if you add that that 4 billion to the tax revenue, what ideally you'd be sitting on is say 20 million or north of 21 billion that would be using for running the government of business. That will improve service delivery because we'd be able to pay our suppliers using internally generated funds through the tax revenues. So that would also reduce our dependence on external financing, either through those budget support loans or through waiting for SACCO revenues. So that will actually improve the fiscal position of government and improve the cash flow within.
Yeah, it's just problems after problems, because really, as you wait, and as we really acknowledge the fact that this impedes service delivery, it sucks that even the next best alternative is not necessarily a best alternative, because it is dependence on what you said we do not want to depend on, which is SACCO revenue. And the fact that it's also coming at its own time becomes another thorn. But perhaps from a behavioral economics point of view, what typically drives under declaration or non-compliance on this scale? Is it a trust issue, a knowledge gap, or the cost of compliance itself?
Ngumalo, you would recall back when the World Bank launched their public finance performance review. So these findings are not necessarily new. The World Bank revealed that Eswatini could improve its tax collection even without necessarily coming up with new taxes up to 3% of GDP. So that means in Eswatini also we've been classified as a gray zone for taxes. So it's more taxes you pay if you want to. That's the easiest way to put it in the kingdom, because there are issues to do with, what's it called, enforcement. It's more on enforcement. That is why when you look at the strategy, on that compliance improvement strategy, it emphasizes more on voluntary compliance, where we ask for people to come out and start complying. But mostly, Ngumalo, economic agents just do not want to pay. If we could get past the payments and not pay anything, that's what a rational economic agent would do. So there would be those free rider problems. That's one of the behavioral issues that you have to look into and try to fix those. And then also, when you talk of taxes, Ngumalo, it's an issue of, people want to pay their taxes and see the impact of those. If you look at the Scandinavian countries, the taxes they run in the region of 50 to 55%. But the people do not, they comply because they know that there's free education from primary all the way through to university, free healthcare. You don't even need health insurance. You just need to go into a facility. You get that. So that improves on the compliance. So it has to go together with service delivery. Make sure that when the people pay their tax, they can actually see the impact of their taxes on their lives, through the things that they benefit from that tax. But also we just need to improve on enforcement. I think taxes are not that much enforced. If you look at other countries, you've seen people go to jail because they were not paying taxes, more especially amongst the celebrities. So there has to be the punitive measures to say, if you don't pay your taxes, or if we do an audit, like a lot of people have never been audited. If I asked yourself, have you ever been audited on your taxes? No, you haven't been.
it with me, but yes, I really take in your submission there, and I do want to ask you, if I were to deduce from that last submission that you made that a big part of it is ignorance that is fueled by a lack of services incentives, if you want.
It's the ignorance and the lack of service incentives, and I'd also add in the level of informality in the kingdom. When you look at the tax that we collect largely is the VAT and the income tax, largely because it's easy to collect. You collect it from the employers, you collect VAT from the shops. But in terms of the other taxes, it becomes a bit difficult. If you think of informality, those are people who don't even keep books. If you come as a taxman and you say you want to collect tax, they will not even have. That is why we see here as coming in to say, give us your presumptive tax based on what you've collected, what you've made, how much do you think you should be paying as tax? And I think now that's a very fundamental step where you get people just into the tax base, and then you get them to comply. Then you need to build the other structures of the economy to ensure that even in the informal sector and the SMMEs, they are able to keep those books and they are able to do that tax calculation. That is why we do upload that we ask Kulume a statement within the compliance program, because that makes it easy. You do not come as a criminal or a person who's evaded tax. It's coming and from the understanding that there are those structural bottlenecks and there exists the basic ignorance. I mean, if you look at the cry that we're seeing here over Dula Dula, it's as if people didn't know that when you get an income increase, your tax is also going to increase. So we do need to educate Maswati around the taxes and how they're calculated, and how you could also benefit from taxes, because taxes are not only punitive, Mr. Ngumalo. There are times where you benefit from your taxes through your business, and only you just need to know the tax code and know how to work through that tax code. So we do need to educate Maswati on compliance and how to actually understand the entire tax system.
Interesting indeed. And this is why I want to study economics. Anyway, the compliance improvement plan launched alongside this analysis, it seeks to close this gap that we are talking about, right? And perhaps you've touched on some of the fundamental steps that the ERS has taken, but one wants to ask, what are some of the key pillars or strategies that should define a credible plan for improving voluntary compliance?
On my end, Mr. Ngumalo, I think the problem is the voluntary compliance. In the sense that you make it optional to pay the tax. I think that's where our fundamental problem comes from. That is why we've been classified as a gray zone for taxes, because we make it more like we're going to massage with the ants those punitive measures. And in cases where ERS has come up with those punitive measures, they've been seen as those as an entity that is out to destroy business. So what we need to do is cultivate the knowledge and the understanding that taxes are not voluntary. I mean, it was I think. I'm forgetting this person who said the only certainties in life are you're going to live and you're going to have to pay taxes. Those are the two things. But in Eswatini, we need to move beyond the fact that it's voluntary compliance. So what we need to do is get people to pay their taxes and make them understand. But at the same time, you also have to improve on the service delivery, because a good tax also offers those benefits that you've put in. If I put in, say, 15,000 per annum, that's going to come up to, say, 120,000 or 150,000 or north of that. I need to be able to see that I'm getting my my taxes worth in terms of access to healthcare, in terms of being able to go there and get an identity document, in terms of the education that my children are going to get. So government also needs to work on that and make sure that people see the benefits of the tax. I mean, we do see them in terms of the infrastructure improvements and whatnot, but what people really want is those things that affect them directly rather than a road which they will use when they go to work. But when I'm sick, I need to be able to get access to healthcare. I need to get my children to school and all of those things. But we do need to move away from that notion of voluntarism. Even though we understand that we are at a point where we are building a tax base and you want people to come and declare, rather what you would come up with is a strategy, and I think Harris is already doing this, where they're going around educating people and then also improving on the compliance, making sure that you have more tax auditors, more lifestyle audits, have people to do those things. That way, people will know that it is not voluntary. And I will have it to you that the tax code does have punitive measures there, including prison sentences, but we seem not to want to do that. But I do understand that you also do not want to create, you have to balance between the political goal and the economic goal. But the main thing that we need to get through is the voluntarism, Mr. Numa.
Let's make the main thing, and I suppose that is something that the Eswatini Revenue Service really needs to, really think about and perhaps implement going forward. And yes, indeed, it was Benjamin Franklin in the year 1789 who said, "In this world, nothing can be said to be certain except death and taxes." I do want to ask you on VAT non-compliance, which is, something that was critical in this analysis. It emerged as the largest contributor. What does that tell us about the structure as well as the health of Eswatini's private sector, particularly in wholesale and retail?
So that could be twofold, Mr. Ngumalo. One of the things that I think anecdotal evidence tells us is, number one, people collect this money even when they're not registered for VAT. So they just collect VAT and they put it there. So now that's fraud, that's criminality there, because you are charging people money you are not supposed to be charging them. And then secondly, it does speak to cash flow constraints and, the tough business environment that private sector is operating in, because if you charge VAT, you're not allowed, you only remit it once a month. So during the entire month, you are allowed to actually use it. So that's one of the benefits of VAT. You could collect VAT today, go restock tomorrow, and only just submit the VAT end of month end. So it does give businesses a bit of that liquidity. But it is an indicator of, the tough environment that businesses are working in. And also it is an indicator of the general human nature that if I can cheat the system, I'm going to cheat the system regardless.
Interesting indeed. Let's talk about what the ministry is now saying. It is saying that this is part of what they call a modernization and a data-driven approach. How can data analytics realistically strengthen tax collection and policy design in developing an economy?
That's quite interesting, Mr. Ngumalo. If you look at where data science and data analytics are right now is in that artificial intelligence and machine learning and big data management systems. So one thing we've learned through those in economics is when you look at those classification models, they're called classification models, they can tell you by learning through this big data that we have, which ideally basic econometric models were not going to be able to analyze because of the computing power. But now with artificial intelligence, we're able to analyze big data and be able to pick up trends and behavioral trends within the market segment, and then such that you would know who is likely to default and what characteristics are those of a person who's likely to default. And then therefore, ARS can focus on those likely defaulters rather than working through ensuring that you are getting everyone to comply, because there are those that are going to comply and they're going to see those attributes of those, and then you focus your efforts on those that are failing to comply, and then that way you are becoming more efficient and more targeted in your intervention. So we do need to ensure that we are pushing a data-driven initiative and a data-driven tax system, because right now, Mr. Ngumalo, data is the new gold. We
Mr. Spear,
cannot
thank you for
dispute
your time.
that.
Sanela Spear, our economist, always happy to enjoy his insights on the economic landscape of the Kingdom of Eswatini. Well, 4.4 billion emalangeni in taxes not declared. That is said by the Ministry of Finance. And Sanele is saying that doesn't help our dependency on SACU at all. So that has to change. But he does say perhaps we need more stringent measures when it comes to tax collection. And indeed, we hope that is going to happen. Let's go for a net break. You're watching Nedbank Business Watch.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.sz. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. You are still watching Nedbank Business Watch. Onto this now. The Institute of People Management, IPM Eswatini, is hosting its annual convention for the 2025 under the theme, The Future of Human Resource, or HR, is now. Power up, inspire change, lead forward. Now, as the role of human resources continues to evolve in a dynamic and global landscape, this convention seeks to explore strategic positions of HR in shaping organizational culture, innovation, and leadership. Of course, presenting the keynote will be the Nedbank Africa Managing Director, Dr. Terence Sibia. However, in this interview, I will be joined or speaking to the President of the IPM Eswatini, Sharon Mazia, to understand the core objectives of the convention and the emerging priorities for HR professionals. A very good afternoon to you, Mkangwan. Thank you so much for coming through.
Thank you for having me.
Right. Big day tomorrow, but
Yes.
really, what is the main objective of this year's IPM annual convention?
The objective for this year is to just ensure that the theme that we have, which is the future of HR, is now. Power up, inspire change, and lead forward. So we're going to be listening to various speakers around that theme, which include discovering your style of leadership in the workplace, building resilient organizations, humanizing the future of work. So we've got a whole lot of topics that are speaking to the theme for this year.
Right.
Yeah.
For somebody that's just heard of the IPM for the very first time, perhaps you can fill us in on the roles, the objectives, the mandate of what the IPM really, seeks to achieve?
Yeah. All right. So the Institute of People Management is a professional body for human capital in the country. IPM exists in most of the countries in Africa. So you have IPM, South Africa, Botswana, Lesotho, Rwanda, Angola. We are all over. So we are the Eswatini chapter. And we look after the issues of human capital in the country, and we promote the agenda of human resources, as some may call it, in the organizations, how code of conduct, how we conduct ourselves as professionals in that field, and just belonging to a professional body that guides and sort of regulates how we should be conducting ourselves as HR practitioners. So that is what we do. Most organizations in the country subscribe to IPM, and there's a whole lot that we run, training, vetting, etc., for human resource professionals in the country, just like you would do for accountants with chartered accountants, with lawyers, law society. We are the human capital body in the country.
Let's zero in on the conference that actually is commencing tomorrow.
Yes.
A hive of activities just by the look of the program, insightful engagements. The theme, the future of HR is now, right? Just by the sound of that, it speaks to agency, it speaks to also transformation. What are some of the pressing issues in the HR landscape that you hope or, you believe this convention will address?
Okay, so I think the important thing is for everybody to understand that change is constant. Everything is always evolving. So it is the same with us in our field, that we've got to be embracing change and transformation, which means we've got to be agile in whatever that we do. So the topics which we have picked for this year are speaking to exactly that, looking at HR trends in the future of human capital in Africa and from 2026 and beyond. And also, in the world where we now have AI, the world has gone digital, etc., we've always got to be ahead. But the underlying factor in everything, regardless of the change that's happening, is that everything is driven by human beings. So it doesn't matter what change happens or what transformation or how digital we get, everything is driven by people. So people will always matter. You will always need humans. There is the fear that AI is taking over. We're going to be retrenched. People will go home. That's not the narrative. We always need people. The only thing is that your role changes as we transform. Yes.
In the advent of, digitization, automation, how do you, as the IPM, envision the future of HR, given the context of digitalization, and AI-driven workplaces?
So firstly, you've got to understand that human resources is a strategic role. It is not an administrative role, because people are important. And so whilst in IT, they're probably working with systems, our working tool is a person. And so they always matter in any organization. So therefore, if they matter and you need people to execute whatever strategy, it means there must be a strategy around people. And so we ensure that at the dining table, HR is sitting as a strategic partner, and they are a strategic enabler. So that has to be really understood, so that we also understand the capabilities of the people that are working in your organization in setting their organizational goals. So in a digital world, you've got to have an HR strategy, how you're going to manage digitalization in the workplace. So that will influence the culture of the organization, because people resist change. It's normal. So how do you deal with that so that you get buy-in and you get a performance-driven organization and people being accountable in their space? And then the most critical pillar as well is the mental health pillar. Because you're dealing with human beings, you've got to be sensitive to mental health. And that is becoming a very serious topic that is sitting strategically in any organization. If you do not pay attention to that component, it's gonna be like, how can I describe it? Like you're walking into an ICU in a hospital. Yes. And there is something wrong. You just can't put your finger on it. But people are like in an ICU because you are not strategically planning and having goals around mental health. So people need to be taken care of. You have to take care of people in order to get productivity.
Right.
Yes.
You said that HR is strategic, not administrative, which was actually you responding to one of my questions on how the IPM is actually promoting a shift towards strategic HR leadership. Now, what role do you see this convention in particular playing in terms of equipping these professionals, HR professionals, with skills to drive change, to drive employee engagement?
So it's actually more than just the convention. The convention is the last part. As we close off the year, it's an annual event where we have different speakers speaking to the theme that I spoke about. However, for sustainability, we have a training plan from January up until October that is able to speak to what you're asking about, employee engagement and data-driven decisions. How do you put together an HR metrics, etc., and how do you measure success, change, and everything around the HR agenda. So it's very important to have data-driven decisions in an organization. So we do it throughout the year. At the convention that we're going to be having, that's just the cherry on top.
Right.
Yeah.
Fair enough. Ms. Mazia, thank you so much for your time. We really do wish you insightful and engaging conversations during the during the convention. That was Sharon Mazia, who is the president of Institute of People Management in Eswatini, sharing insights on the upcoming annual convention that actually commences tomorrow. This is Nedbank Business Watch. Stay tuned.
This is Subsidy, the game show where we talk about government-sponsored financial incentives. Our first question: which of these sectors benefits from government subsidies? Agriculture, education, transportation, or all of the above?
Oh, that's easy.
The answer is all of the above.
He's right, but there's more to the story. Sometimes governments support their people and businesses through a policy tool that brings down prices called subsidies. They do this to create long-term benefits for the economy or to help pay for things that the market isn't providing but that people cannot live without. Subsidies can also be a helpful tool when an economy is hit by crisis. Let me show you what I mean. Take housing. Everyone needs a roof over their head. Unfortunately, not everyone can afford it, but governments can help by subsidizing rent for poorer citizens or building more low-cost homes. Education subsidies, like discounted tuition or free textbooks, can make schooling affordable for more people. As a result, people are more skilled and can get better jobs. Even something as small as bringing down the cost of public transportation yields benefits for the environment. Not to mention, it gives people more options about where they can live and work. But not all subsidies are helpful. Some have downsides. Oh, this is me.
Doors open.
Take a look at one of the most common subsidies. Energy. In a lot of countries, fuel subsidies can mean consumers are paying less for fuel than it actually costs to produce. And that doesn't even reflect the environmental cost. Look at coal. Burning coal produces electricity, but it also pumps carbon into the air, which causes pollution and contributes to climate change. If the price tag on coal doesn't include these environmental costs, companies will always choose cheap, subsidized coal over more expensive clean energy sources. On the flip side, when governments subsidize green energy sources, they make the clean choice the more affordable option. At the IMF, we support these types of reforms that get energy prices right and tax pollution, especially when the added revenue goes towards programs that can help the poor. Basically, making sure that subsidies do what's best for people, the economy, and Mother Earth.
Welcome back now for our market analysis segment, which is actually the last segment of the program. Toba Gamete, the Treasury Sales Manager at Nedbank, joins me in studio. Very good afternoon to you, Gamete, and thank you so much for coming through of late. Well, today, actually, the observation is that the rand is performing quite well. Not sure if this is or could mean that the dollar is to decline sooner than expected, but really, what's driving this performance?
All right, good afternoon, and thank you for having me, Notsile. So yes, the rand is doing quite well today, but more than anything, it's dollar weakness. It's driven by dollar weakness, but it's overall just doing well against all major currencies. So mainly what's happening today is that we expect the Fed's governor, Jerome Powell, to make an announcement or deliver a speech regarding interest rates. So we expect to see the U.S. cutting rates by 25 basis points. So that is what the market is anticipating. So that is sort of then driven the weakness that we are seeing in the dollar. In addition to that, there's also just the dollar has lost ground because of sentiments as well, like around the easing of tensions between the U.S. and China. We expect President Trump and the President of China to have a meeting tomorrow. So from that, we expect that some sort of trade agreement will sort of come out. So those are the two factors that are driving the dollar weakness that we're seeing in the market.
Given that much anticipated meeting between U.S. President Donald Trump and Xi Jinping, I know that China has made a couple of demands, one of which is tariff reduction and the U.S. restrictions on Chinese access to NVIDIA chips. How could we see this playing out?
So yeah, there is quite a lot of expectations, but I think what would be key, or what would really drive the needle, will be maybe a joint statement that we can see that says that A, B, C, and D is going to happen. But it can still, go either way. But we do expect that it's going to be a smoother interaction or engagement compared to what we've seen before. But I think what would really drive markets would be probably a concrete outcome that says tariffs have been reduced here, this can be exported and so forth. Yes.
Now let's get into equities perhaps. I'll start off with Nvidia that surged towards a $5 trillion valuation. Any market or investor sentiment around that?
So yes, so investors have taken that quite well. Overall, the tech sector is sort of performing well and has driven the numbers that we're seeing on the S&P 500, up 0.23%. So it's due to a number of things. It's earnings reporting. We're expecting to see 3 more tech giants today reporting their earnings. That is Meta, that is Alphabet, as well as Microsoft. But more than anything, what the market is looking for is more than just solid performance numbers. I think what the market now wants is a clear indication that AI monetization is going to be sustained and that AI demand is going to be sustained. It's not just a boom that is going to die down. That is what the market is looking for when it comes to the tech companies, but they are growing exponentially. So we expect to then see what the other 3 that are reporting today are going to report, but we expect good numbers.
Right. Given the FTSE and the JSE All-Share Index, I see it's all green. What's happening in that regard?
So it's mostly the same in terms of the FTSE. It goes back to the rate decision that is expected later today. So investors then, with the expectation that rates are going to be cut, then sort of then move into riskier assets because the interest yielding assets are sort of not an ideal investment option. So we do then see them flocking into your stocks and all of that. So that is what has also driven the price or the price of the FTSE. And then when it comes to the JSE, it's a number of things. It's the economic outlook of South Africa. It is the price of gold. We've seen gold, sort of climbing up again after taking a knock yesterday. So all of that is contributing to what we see from a South African perspective.
Speaking of gold, let's have a look at our commodities. Are we still yet to see, a sharper spike when it comes to gold, or the performance is yet to stabilize?
So gold has sort of been, I think, it's sort of been more volatile than we've seen it before. Yesterday it dropped to about 3,800 and some change dollars per ounce, but we've seen it bounce back today to the levels that we're seeing above 4,000 again. That is due to a number of things. When the dip happened, we saw some central banks piling up, buying more gold. We're also Another factor is obviously the interest rate cut. Gold tends to do well when rates are lower. So we do then expect to see the price of gold continue to increase. It's a significant increase, 1.88%, that we are seeing from the dip that we saw yesterday. Right. So just to answer you, it's a little bit more volatile than we are used to, but yeah, we shall see.
Right. Okay.
Yes. I just wanted to comment on oil as well. Yeah. Which is sort of steady, but what is driving that from that perspective is the anticipation of a trade deal between the two biggest consumers of oil, the US and China. So the market is anticipating that if there is a truce there, then it means demand for oil is going to increase, production is going to increase. So within that's pushing up the price of oil.
Right. When we started earlier, we talked about how the rand is performing well today. So let's take a look at some of our currencies. How is the rand performing actually against some of the world's leading currencies?
Okay. Yeah, so the rand is doing quite well against all of the major currencies. On average, about 35%, about 0.35% across the three currencies. It's 17.1025 against the US dollar, 19.91 18.75 against the euro. We haven't seen 19 in a couple of weeks, I would say. So that's some good number from the rand. 22.605 against the pound. So it is doing quite well, driven by the interest rate announcement that's coming up, as well as just sentiments. I think if the market is more accepting of risk, then they tend to then look at emerging markets for investment, hence driving what we are seeing.
How long can we see the rand keeping up this impressive performance against some of the other currencies?
You know, with FX, it's never easy to tell. You never really know. But so far, the outlook is looking quite good for the rand.
Right.
We are likely, probably in the short term, going to see a bit more strengthening that's happening. I think global sentiments are also favoring the rand as compared to major currencies. So we're not sure how long this rally is going to take, right. But so far the trend that we are seeing is rand strength.
Right. Toba, thank you very much for that analysis. That was Toba Kamete, Treasury Sales Manager at Nedbank, helping us make sense of what is making the day's trade. The show continues. Actually, my colleague and I will be wrapping it up after this.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. 2 minutes before 3. This is the final stretch of the show. We hope that you had a great one. Interesting conversation I had earlier today with the president of the Institute of People Management on the upcoming convention, discussing, the role of HR in shaping organizational culture, innovation, and leadership development.
Quite interesting indeed. And, it's a lot of interesting things happening around the country. And, just under the backdrop of what the Ministry of Finance with the ERS are doing in terms of just trying to find ways to close that tax gap, sitting at 4.4 billion emalangeni, whooping 4.4 billion emalangeni. That's a lot of money. And, our economists submitting that perhaps we need to make filing your tax is not voluntary. We need to have stringent measures because as it is, it forces us to depend on SACU, and that is not healthy for our economy.
Right.
Yeah.
File your taxes. It's not only for you, but it is for the national development. This has been Nedbank Business Watch. Until next time, bye-bye.
Make better money choices.
Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.